Finally, after such a huge upswing in the SPY, prices are starting to take a breather and slow down in its uptrend. After a failed attempt to reclaim the all-time high over here, SPY has started somewhat of a brief retracement. And this breather would mean good news for my portfolio, especially since some of my calls in the portfolio which I have sold would have a lower value now, and this will allow me to roll out and up easier. So let's take a look at our first trade of the day. That will be our Apple calendar spread. For the Apple calendar spread, last week I've sold a 117 strike call against a leap call that I've owned that will be expiring in 20th January 2023. Right, so this call I've entered at a price of $25.91. Right now, we are seeing a slight dip in its value. It is going only for $24.92 to 93 cents. But that's all right because the premium that we have collected from selling all these calls have more than make up for the slight loss in the long leap call. And when you trade a calendar spread, the fall in value of your long option is going to be more or less expected, right? But the loss in value in the option that you own will definitely be lesser or lower than the value that you get from selling calls or puts against your position. For this position that I'm holding right now, we have rolled it out and up 2 weeks ago with a trade price of $3.27. Right now, the market is only going for 97 to 98 cents. So this will make our life easier when we are going to roll it out right now. So if we look at the option chain for Apple, this is the short call that I'm holding right now. So what I want to do will be to buy it back, and I'll be selling the next week's expiration. Against a current price of 98 cents, you can see that my alternatives right now has opened up by quite a bit. I can sell for the usual strike price at 118, and this will allow me to collect another 64 cents in terms of premium. If I'm more bullish on the stock price of Apple, I can also choose to roll it further up into the 119 strike. This would mean that I will collect lesser additional credit, but it will also mean that the short call that I sell will get to expire much more easily. Now, if we go to the charts of Apple, this is how the price action is behaving right now. So you could say that Apple may be supported by the 20 exponential moving average, and this could be the end of the corrective wave, and what is going to follow would be an further upswing. So if that's the case, then you might want to be more bullish when you are selling your calls against your position. So that's on the bullish point of view. And for the bearish camp, you could also say that the correction is not yet over. There is still a chance for Apple to come back down to test the 100 moving average again. If we were to draw a trend line, support and resistance somewhat like this. Alright, so you may or may not agree with this trend line, but what's more important is that in the vicinity over here, we have this trend line and the 100 moving average. So these two together, if the trend line is accurate and to be respected, might form a strong support for prices to come back down to test before showing the next impulsive wave again. Alright, so I'm going to adopt a more bullish standpoint from here, and what I'm going to do is to sell the 119 strike instead. Right, I don't mind collecting lesser premium, but allowing my short call to expire worthless much more easily and collect all the premium that I have sold. Right, so I'm just going to confirm and send and wait for it to get filled. Next up in line, we have Bank of America. This is the cash secured put that I've sold previously wanting to own Bank of America at a strike of 24.5. So it is going to expire worthless very easily. Bank of America right now is only going for $26.80 over cents. So no problem with that. I'm just going to leave it there. If you have recalled from last week's episode, I've mentioned something about collecting the dividends of Johnson & Johnson, ticker symbol JNJ, right? So this week, what I've done is that I've sold a cash secured put for Johnson & Johnson expiring today at a strike of $147. For this, I've collected a slight premium of 41 cents. And right now, Johnson & Johnson is slightly below our strike price. It is currently going for 146.89. So I'm going to leave this and let it continue to run. And in the case where it gets below our strike price by the end of the day, I'll close out the option trade manually and I'll purchase 100 shares of Johnson & Johnson manually as well. I would like to avoid auto assignment because there might be assignment fees involved and that might be quite hefty. Alright, so this is the chart for Johnson & Johnson and we can see that it is currently in somewhat of a consolidation between these few horizontal support zones. Alright, so with the current price action, you could not really decipher in which direction the prices is going to head towards next. So what I'm going to do after owning the shares will be to be more conservative and sell a call against my stock position with a lower strike price. This is such that I can get out of my stock position much more easily without incurring that much of a loss, because the loss will be cushioned by the premium that I have collected by selling a short call over here. So after owning my 100 shares of Johnson & Johnson, what I will be doing will be likely to sell the 146 strike call. And for this, we are looking at premium of somewhat about $1.26 to $1.37. Johnson & Johnson will be giving out dividends next Monday on the 23rd of November. And I'll let you in on a little bit of my plan moving forward. So after Johnson & Johnson has given out its dividends on Monday, and if prices were to stay rather flat and sideways at about 146 to 147, what I will do will be to get out of my option position as well as the stock position together, making sure that I do not incur any loss. And if there is any profit, that will be a good bonus for me. And after getting out of my position and having back the cash into my account, what I'll be preparing for next will be the Bank of America dividends. So Bank of America dividends will be coming up very shortly on the 3rd of December. So this will be the following Thursday after next week. And in fact, we do not really have much time to accumulate Bank of America after getting out of Johnson & Johnson. So my plan for Bank of America for next week will be to accumulate some time after I have gotten out of my position in JNJ. And what I will be doing will be to sell a call against my stock positions again to cushion for any potential downside in prices. So for Bank of America, I'll be looking at selling the 4 December calls, and depending on my strike price, I might be selling the 26.5 strike call, or I may also be selling the $27 strike call. Right, so that will depend on how things progresses, and I'll be sure to keep you guys updated via a Facebook or Telegram post, which you can join using the link over here. And now, speaking about Bank of America, what I'll be doing next will be also to sell another cash secured put at a strike of $26. So this will be in preparation to own the shares in the case that prices could come back down again. And if it does not, then this premium that I've collected upfront right now will be the cash flow in a month forward. So I'll be looking to sell at the ask price at perhaps 60 cents. And if it gets filled, then good for us. And if it does not, then so be it. Next week, I'll then be looking to sell 24 December expiry instead. Now, for those of you who are wondering, prices have already shot up and skyrocketed so high in somewhat of an exponential and parabolic price action. Why am I still wanting to sell cash secured put, executing the wheel strategy in order to own the Bank of America? Is it even a wise thing to do so? If you have that question in mind, just a quick revision is that when you are doing a wheel position or selling cash secured puts for the stocks that you want to own, firstly, you want to make sure that the stock is at fair or undervalue. So even though Bank of America has shot up by quite a lot, and in fact it is quite far from the moving averages, it is kind of supported at the 2650 support over here. This could be a place where prices will hang out and consolidate for quite a while, and meanwhile wait for the moving averages to catch up. And what's more important is whether Bank of America is still undervalued at a price of $26. So if we quickly go over to Finviz and take a look at its price to book ratio, its price to book ratio is less than 1. Alright, and recall that for any price to book that is less than 1, I'll consider this as undervalued. And from 1 to 1.25, I'll say that it is at fair value. Anything more than 1.25, that is overvalued. And also recall that we only use price to book for banks. For banks, we do not use the intrinsic value calculation. LMT and Adobe, they are trading positions. They are not meant to be here. And lastly, we have Yum China Holdings. So also expiring today, 52.5 strike put that I've sold in preparation to own 100 shares of Yum China back at when it was at $52. So for this, it is also going to expire worthless. No action will be needed. And if we go over to the chart, I still recall 2 months back when prices were about here, I was selling a cash secured put at the $50 strike in an attempt to own the stocks. That did not happen. Prices went up quickly after. And after I see this recovery in stock prices, what I've done is to sell another cash secured put at 52.5 strike. Alright, so this did not get assigned as well, and you can see prices recovered and shot all the way back up to where it is right now, making a new high. And in fact, last week I said that it might be coming down in a correction soon, but it seems like that is not going to happen. So we can only wait for it to come back down again. Alright, so this is also one of the downsides of executing the wheel strategies on stocks you want to own instead of just buying them outright, like at this dip over here and also at this dip over here. Back at these two prices, Yum China was already quite undervalued. Alright, so just bear in mind that sometimes you might not get assigned the stocks that you want, and the stock might just fly back up without waiting for you. And you'll just lose out and be left waiting there with the little premium that you have collected. Now, if you really want to own the stock over here, perhaps what you could do, other than buying the stocks outright, will be to sell a cash secure put at a more aggressive strike. So let's say prices were at $50 to $51 over here. What you could have done would be to sell a cash secure put, let's say at the strike of 52.5, right, above the current strike price, such that your cash secure put will get assigned much more easily. Or you could even go up to a strike of 55 if you're really so desperate and want to own the 100 shares immediately. So this is also some alternative that you can consider the next time you are doing this strategy for yourself. Alright, so that's all the positions that I have to cover for this week. And this week is indeed a much better week for us because after 2 weeks of tight squeeze, our cash flow for this week has been much better. I hope you have enjoyed today's session. If so, please show your support by smashing the like and subscribe button and also turn on the bell notifications so that you'll receive updates of when our next video will be uploaded. Thank you so much for watching and I look forward to seeing you in my next video.